Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Tuesday, October 11th, 7:02 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin is hovering at that 19,000 level. Oil's down 2%. Yesterday afternoon, Russia came out with declaration that they're ready to go to the diplomatic table, and oil did not react favorably to that. Went from green to red, and now we're down 2%. Probably fake news, but price action is what it is. Equities are down a little less than 1% across the board. The big thing on the macro front is we've got producer prices tomorrow, and we've got consumer prices on Thursday. I think that is what is going to drive the market this week and maybe into the next month or so. If those come in hot, or let's put it this way, if the market reaction is negative, meaning giving the Fed no excuse whatsoever to pause, back down, anything like that, then there's the potential for a leg down. And as the title of the video suggests, we're right on the ragged edge of nothingness. I don't want to, make it too dramatic, but we're at the point where, if there's a decisive break lower from here, based on, that PPI, CPI combo print, and then the Fed goes ahead and does another 75 basis points in like 3 weeks, then the equity market is going to have some stiff headwinds. So I want to do something a little bit different this morning. I'm going to blast through our normal deck quickly. Not a lot changed yesterday, so it's not like I'm going to be skipping over anything. But then I want to go big picture and show you the sector weekly charts and the weekly charts of the indexes to just give you a picture of where we're at. So with that, let's get started here. Relentless bid on the dollar. So after a brief 5-day pullback, now we're heading back up. Just a relentless bid in the dollar. And here's TLT weekly. I wanted to show you where we're at. We all know about the rug pull. Then we put in this bear flag, and what I've done here is simply do the measured bear flag extension, first leg, bear flag, second leg, and you can see that we're coming up on some key spots. Now, just the other day, or just the other week, we talked about a break of 105 would open the door for a leg down, and we got that. We're coming in towards 98, and these aren't random numbers. What I did was go back in the chart and find technical support. So there's technical support here at 98, and there's also technical support at 84 that goes back. Even on the screen here, we're back to 2017. So that's 5 years worth of data just right here, and then you got to go back more or less 8 or 9 years to find technical support at this 84 level. But as is often the case, the technical measured move target aligns very well with technical support. So you've got a measured move target here that is actually, already fired, already broken this 105, coming into this intermediate support level at 98. So if 98 goes, then that really opens up for a move to 84, which would obviously be, catastrophic for the bond market. So have those levels alarmed. Even if you're not trading, TLT, those will be important signs. And remember, dollar up, TLT down is problem for equities. It's just that simple. VIX took a leg higher yesterday, closed in at 32, and really now, as we've been saying, the door is open for whether you want to call it a panic move or a flush move or capitulation low, to come up here and spike, 36 or even beyond. Remember back here, we kept wanting to get that 40 or 50 on the VIX, like, okay, now we can go in. We never got it. So just because these instances back here got rejected at, 36, don't think that, a breakout above for an absolute moonshot isn't possible. So keep that in mind. But right here, very difficult to, camp out long, because when you got a vol of 33, it's just too tough. So be careful there. Bitcoin, as we talked about, just toggling here at 19,000. I've been expecting this to break, hasn't happened yet. If you want to trade it, just have your alarm ready and know the vehicle that you're gonna, your vehicle of choice, whether it's going to be futures, whether it's going to be a Bitcoin long ETF that you're going to short with options, or short the common, or you're going to find a short ETF that you're going to go long. And there's been a proliferation over the last 6-8 months. There's a number of them out there. Just figure out which one you want, because as we've discussed, there's quite a void under 19,000 where you really could see a fast flush down into the lower teens, 12, 13, something like that. So be ready there. I mentioned at the outset that oil was down $2. So we're in a downtrend. We had a breakout and a rally. Came right up here to tag the 50% retracement area, and now we're down $2 today. So this thing has got to hold the 50 right here at around $89, or this thing will just look like a kickback rally that failed. Now, of course, some of us are in some energy names, ExxonMobil, etc. And timing is going to be an issue, at least for me, because right now that looks like a losing trade. I might have to bail out of that today and then look for a reset, because I'm in October, which expires, in 10 days. And so there's not going to be a ton of time to lollygag and wait around for a bounce. Even if this thing isn't an uptrend, it might be a timing issue. So respect your stop. Be aware of your expiration. If you're out in November or later strikes looking for higher, then I think you can you have a little more leeway here. But below the 50 EMA down here at whatever it is, really about 88, 89, I would be cautious if that breaks, because then, like I say, it looks like a 50% rally and then a comeback. Or excuse me, 38%, 50% is up here. Sorry about that. So be aware of that. NIMO, our oscillators really didn't do much. They went down a little bit, down here minus 40. But I think with this posture, if we do get some kind of big negative print out of PPI and CPI, there's the ability or the likelihood that these will then go oversold, and then we can look for a rally out of these oscillators. NASDAQ, the NAMO, not as bad, minus 30, but like I said, if there's some big down move, this could easily go into minus 60 territory. SPY, I really want to see SPY get over 362.50. Now it's below. I mean, it's just sitting here on the ragged edge. So, I mean, firm downtrend in place, kickback rally to trend where it got rejected, and now price is below, of course, all the moving averages and below key support. So not looking particularly great there. Yesterday was it turned out minus 0.75%. We came down and touched this 357.50, got a good bounce, but then got rejected at that 362.50 level. That's why I've left this pivot point there, because I think there, once you get above that big level, you're back in this value range, and I think you got a good chance to get up $5 higher to 367.50. But while it's below, then you gotta be watching again $5 lower down at 357.50 for the next break lower. Qs, same idea. Really needs to get above this June low at 270. Here it's in a very vulnerable posture. Looking at the 60-minute chart, you can see we had a low right here just the other day at 267.50. I think that's your pivot point. If you can get above that, you got a chance for a $5 move. But while it's below, you can see that we're on the lower half of the midpoint line. And then if you extend this lower part of the channel, you can see that we could easily drop down for a tag of the lower part of the channel down in the high 250, 258, 257.50 type of a range on a down move. And really, I think today sets up as a possibly an oscillation day in front of big macro numbers. I don't know if a lot of people are going to want to take a big swing, the day before these numbers come out, just because it's a total coin flip. You don't know what's going to be perceived, as hot or better than expected, and then what is the market reaction. So this may be a day where price just kind of oscillates in a narrow range. Yesterday, IWM, down about 0.5%. Not a big move. Down here, back testing this downtrend line. If we go to the 60-minute chart, you can see that were right at the midpoint of this prior trading range. So I think today, if you key off a 167, you'll have a nice line in the sand to shoot against. I think if I'm wrong, and this is a moving day, where there is some significant movement of price. If you break 167, then I think the door is definitely open to 164, and I think price would come down and explore the lower part of this prior trading range. So I think 167 is your pivot point for this morning. Meta, plain and simple, it's got to recapture 134, or the door remains open for a move lower. And remember, this prior trading range was 134 to 142, so that's $8, and $8 from 134 puts you down at 126. So, and you can notice here that price remembers, right? We broke below 134, and then look at all the action here along 134, where we've spent quite a number of hours trying to get back above 134, just has not been able to do it. So I think that's your clear pivot point. I think it would be important if it can, break back above. But as it stands now, the door is open for lower. Apple didn't do a whole lot yesterday. I think 140 is your pivot. Below 140 opens the door to 138. As long as 140 holds, I think your upper target here is 142.5, maybe 143 at the bottom of this gap and the midpoint. So to me, 140 is your pivot. Tesla looks like it's trying to form a base here at 221. You can see the big move down, bottom of the channel, lots of price action, just $5 ping-ponging between 220 and 225. Really need to break above that to possibly get a kickback move to 235, where you'll have some resistance there at 235, and then 242 would be, an important move to break out of this downtrend channel. But then below 220 opens the door back to 215. Microsoft had one of the nicer trades yesterday. Why? Because once it broke 235, we got this measured move right off the bat. The width of this trading range. Once there was a break there, it went right down to the measured move target. So now, 227.5 is your pivot point for today. And you notice that we're back into the downtrend channel. And so a break of 227.50 would open the door yet again for a move down into the low 220 range. Amazon broke this midpoint, came right down to the bottom of the box. So you got a $6 wide range. 212 is your pivot, or excuse me, 112 is your pivot. So if you lost 112, your measured move target is going to be 106 down here. Just going off our principles. As long as 112 holds, the bulls can stay alive. Really need to get back above 115 to open the door to 118 at the top of the box. So we may see a, top of the box, bottom of the box, top of the box if there's, some positive price action. But if not, it'll open the door for lower. Same thing with Google yesterday. We were at the midpoint heading into the day. Once we broke that 99 level, right down to the bottom of the box. And I often say, that's why I draw the lines. If you can get these technical levels right, and that's my calling card of giving you the actionable levels. You can see, for the most part, it doesn't always work. I'm not always right. Price can do whatever it wants to do. But in general, if you're at the midpoint of a trading range and then that midpoint breaks, 90 times out of 100, you're going right to the bottom of the box. That's just the way it works. And if you're an active intraday trader, $2 isn't going to make you rich. Let's face it. But it's better than trying to be long, right? At least you're on the right side of the trade. So you'll have to decide, for instance, heading into the day, if you know that's the target on a break of 99, it's certainly fine to say, I don't think it's worth it. I'm not going to take that trade, even though I think that, that alarm went off. I think we're going to 97. If you don't want to take that trade, that's certainly your prerogative, and, just let it go. But if you do take the trade, you know exactly where your target is, and that would be the place you wanted to cover because you're back at support. So, sell the breakdown and then cover at support. And so you basically had, at least an hour to cover it. And then you can say, okay, on a break of 97, I'll get short again. So that's just a little bit of trade management. We had the bad breakdown on Netflix yesterday. We got we filled the gap, came down, made a couple actually, first bar out of the gate, we came right up to 234 to tag that, and then that failed, and then there was a bounce later on. But the point I want to make is that technical action that you often see. Look at all the rejections at 234, look at all the support at 234, and then you had one candle come up just to revalidate that 234 was important. So haven't done it yet, but a red arrow there as a rejection. So it's just amazing how these levels work. So how you want to trade it in here is up to you. I think 228 is an important level, and I think 234 is an important level. And if price were to break above 234, I would take it, because I think that is that's the biggest pivot point on this whole chart is 234. And if you're above 234, you will have recaptured the main pivot, and I would certainly want to be long there. Semiconductors, rough looking chart. Why? We're in a major downtrend line. We had a major liquidation off of this rally, that sent us down into the old trading range below 195, and we made a beeline to 185. Not even a bounce there. We cut right through it, and now we put in a we are building out a bear flag. So just on the face of it, until or unless price gets back above 285, or excuse me, 185, I'm sorry, your measured move target just from this range is 175, right? 10 from 185 is 175. But if you look at the bigger picture, if I were to draw the first leg of this down move here and then take that distance to find the measured move target here, it's probably closer to 170 on the on that measured move target. So this is a very bearish setup. And if there was a little rally into 185 that you saw stall, that's a very objective place to take a short, because then you'd have that breakdown, little baby back test that fails, and then that opens the door for a major leg down. Quickly through ARC, we're coming in here, ARC F, we're coming down into 15, which was key support going back all the way to May. If that breaks, well, you're looking much, much lower. ARC G, we had a breakdown. We had a run up to the top of the channel. Now we're down to the midpoint at support. I would be keying off of 3150 for a break, which would send this thing lower, certainly down into the high 20s just for starters. And you can see the low water mark in June was down at 27. That would be, I think, a pretty good target on a breakdown. Flagship fund, right on the raggedy edge, right down here just above 36. You can see the prior lows. I would have that level in the crosshairs for your for your alarms if you want to take a short on a breakdown there. And then wrapping up with ARCW, it broke yesterday. You can see this big trading range. You can see the prior lows back in May and in June, and now that has broken. So that I know a couple of guys in the trading room took that short, and if you're willing to take $1.50 or $2 worth of heat on ARCW, I still think it's a decent short trade. Now, we're down a little bit this morning. We'll have to see how ARCW opens. If you get some kind of massive move down here, you might want to wait, given PPI and CPI in front of it. You'll just have to see. But remember, the measured move target going from 46 to 59 is $13. So that's your objective. $13 lower than 46 brings you down into the low 30s. So even with $3 a risk, say, you still got a 4-to-1 risk-reward ratio, which is still pretty good. Now, what I want to do quickly is show you the weekly charts, starting with SPY. You can see we're right at the edge. Got a shelf of support here. It's got to hold. This has got to hold. And remember, these charts don't finalize until Friday. Weekly charts end on a Friday. So if there's some big, negative reaction and all of these support levels break, then the door opens for a move lower, certainly down to 340 or even down to 320, and that was the pre-COVID high, which has been a location that we've had on the board for months and months and months. Watch for the pre-COVID high as a massive, massive level of support. So as you watch this week, watch these levels. The Qs, same thing, 260, right? 260 was a level of support, and then you got a big air pocket here on the Qs that would take it down to 230 at the pre-COVID high. So critical spot. IWM, we tested the pre-COVID highs down here at 161-ish. We had a tag here and a tag here. I won't say we're comfortably above, but farther away than SPY and the Qs. I would have that level marked. Materials. Not as dramatic a setup as some of the other ones. We've had 3 positive weeks after we tested this low here at let's call it 67.50. I would have that level marked, and you also have a level here. If we get a positive reaction, you get through 72, then that opens a door for a run back to 77-ish. Communications, which is basically Google and Facebook. You got a perfect line here. You can see the little, whether you want to call that a flat flag or a base at 47.50. I mean, that's your level, and we're already past the pre-COVID high, so we're already well below. And you can see what the COVID low was, $10 lower. If Facebook starts to really fall away from that 134 area, and Google starts working towards its measured move target down at 91, that's going to have a huge influence on XLC. And if you get a weekly break of 47.50, I think that that is going to be very telling. Energy's holding up the best, right up here, actually near the highs, even though the price of oil is $35 off the highs. This is still hovering at 80 on XLE. And just a reminder there, XLE is like 45% Chevron and Exxon, so those are your drivers of XLE. Financials, we're toggling right at the pre-COVID high, which was 30. If you get a break of 30, opens the door to 27. That's got to hold. That's got to hold right here. Industrials, same thing. We tested the prior lows. Here are the pre-COVID highs down at 80. A break of 80 opens the door for a lot lower, and next leg down. So I would have this 83 alarmed in your system as the prior low on the weekly charts. If I can get it here. There it is. Technology is starting to fade away. Still pretty far away from the pre-COVID high at more or less 100, but we're right at the edge of making new lows here. And of course, you've got Microsoft and Apple are the biggest ones in XLK. So depending on, if you want to play the basket or just play Apple or Microsoft or some combination of those, I think technology is going to stay under pressure if this environment of rising rates persists. So I would have this, whether you want to call it 120 or whether you want to call it 118, that's up to you. But you can see that we're right here on the top end of this little value range, and a break there would send it down towards 107.50. Staples made a new low from here, and we're right down here at 66, where you can see that below 166 opens the door. You probably get some support in here at 64, 63, somewhere in that area, but the door would be open then to the pre-COVID highs at 60. And remember, the thing there is, and I've mentioned it before, a lot of people gravitate to these safety names for the dividend, whether that's 3.5, 2.75%. If the 2-year is trading over 4% and the 10-year is close by, you have options. If you're a yield hunter, why would you take equity risk at a 3% dividend if you can get risk-free 2-year at 4.25%? Why wouldn't you bail out of quote safety names, and if you're a yield hunter, go into treasuries? So there's that. Same kind of idea with utilities. A lot of dividend hunters here, and you can see that we're right at the pre-COVID highs, right here at 64. If there's a break there, then I don't want to get over dramatic and say it's over, but I would say from a technical standpoint that it's over, right? You lost the pre-COVID high. This should all be massive, massive support here at 64. And if it can't hold it, then you certainly have a big open door. That would tell me that interest rates are running even higher. And again, why do you want to sit in a utility paying 3% when you can get 4 or higher on a treasury bond if you're just looking for yield? XLV is remarkably resilient. Actually, right here at the bottom of the box at 122.50, you notice that there's a high volume over price bar right here that lines up with this low at 117 and a half ish. I think there's probably, if you're going to go, if you decide or the charts indicate you're going to go gonzo short, there's probably better places to do it than a sector that's obviously outperforming most of them. Why do you want to take a short here when you've got other ones that are moving into, massive voids on the chart? I think this would be one of the ones, if there's a big positive reaction after these PPI and CPI prints, and you break back above 122.5, 123, then there's a good chance, if the market is lifting, you could get a run back up to the top of the box at 134, 135. And to wrap up with discretionary, remember Amazon is like 25% of this one. Just above these, this, what is that? 6 week, 7 week testing of these lows, that should be solid support at 136. So I would mark that, and if that breaks, that would be a major technical event. You can see that there is, however, some solid support down at 130 at the pre-COVID highs. So that would be another alarm to set there if you decided to say, okay, let's see what happens at 130. So if you didn't want to try for this $6 move from 136 to 130. Want to wrap it up there. Running a little longer on time, but I wanted to get a lot of this in because of these longer time frames that we're at a massive critical spot, especially given the big macro numbers, the inflation numbers, producers and consumer prices out this week, and a looming Fed increase in 3 weeks. We're at a point where if all of these weekly charts break, then there's the potential of kind of a panic low being put in. But I will say support is support unless broken. I would not try to front run where we're at now with a big short. You got to wait till those things confirm, and then we'll decide what to do. So right now, support is support. So that remains in place until it doesn't. So I hope that makes sense. The next day or so may be days to, cool your jets on big swing trades. If you're, in that mindset, if you're actively trading, you've got all the levels. If you want to try and, scrape off a few dollars here or there. But I will tell you, if there's a big positive reaction after these macro numbers come out, I would grab them long, because you should have confidence knowing that you are at big weekly support. And then if you get a positive reaction, then you can be long against that number or that line in the sand, knowing that you are at solid support there on the weekly charts. So let's wrap it up there. Hope you got something good out of the video. This has been Chris Buss with Traders Profit Compass. Have a great day of trading, and talk to you next time.